All right, good morning here for me in Sydney. We're going to go over a trade that I took yesterday. So, looking at the DXY right now, um, I'm going to share with you guys basically my analysis. So, on the weekly time frame, the DXY came into this weekly order block. You can see that it tapped into this bullish order block, created a rejection with a large wick to the upside, and then tanked lower, creating a gap. And so this is the low of that bullish order block. Many people make their order blocks in different ways. This is how I make mine. So weekly order block was tapped into here. We got a shift here with price breaking this low. Just a classic market structure shift. And then with the tariffs on Monday, last Monday, Trump basically pushed price back up to here, and then we completely reversed after coming into this daily order block and sweeping this liquidity. This caused a shock, a change in state of delivery right here, and that's why I'm expecting this sell side liquidity to be targeted. You can tell from this chart that I use order blocks, supply and demand, whatever you want to call it. The supply is in control as of right now. This supply caused the change in state of delivery. This supply is potentially going to cause these lows to be swept, and eventually this low, which I'm looking at. So yeah, that's the daily time frame. I'm bearish on the dollar. If we go to the 4 hour, this is why I was bearish on the dollar coming into Tuesday. We came into this 4 hour, we closed this 4 hour gap and we came into this 4 hour order block. And then we got SMT, and then I basically got my model, which told me to short DXY and essentially long the euro. So yeah, this was my original drawn liquidity. I did close before, and that's just, I wanted to secure my 3%, and I'm satisfied with it, but I'm definitely going to journal why and how I could have made more, and why it was a good idea to hold the trade for longer. So if we just drop straight down to the 15-minute time frame, this was essentially the short that I took on the euro. This is that SMT on the 15-minute time frame, so you can see that we closed above the high, and then we had this liquidity to target, like these equal lows and this low, and we had already closed this gap, and price was telling that it was going to the downside. So that's why it was an appealing trade for me. If we look at this, we literally created liquidity before mitigating this 15-minute fair value gap. We were also in a 1 hour balanced price range just up here. Look how it respects it to the T, literally. We come up into this 1 hour sort of order block, and boom, we just tanked. And this could have been another trade as well, a scale in. But I didn't take it. I didn't take it because I was going to bed, and I wanted to secure my profit. Do I regret not having made this whole move and instead only making a portion of it? No, because I made my portion and I'm satisfied. However, I could have done better. So I'm always going to be journaling that. Let's look at the euro now. If we go to the daily time frame, this was how Monday's candle closed, and if we look at the wicks in here, yeah, we're basically respecting the volume of the 25% level of this rejection block. Going down to the daily time frame, I'm just going to take this off. On the daily time frame, on the 4 hour time frame, what I was looking at was, again, these rejection blocks, ICT says it all the times, they act like gaps. So this 25% level, I wanted to see if it was going to hold or not, and it did. And the lowest I wanted to see was obviously consequent encroachment at the 50% level, but I removed that to make the charts clear. We had this 4 hour gap to target, price was consolidating, and then we got the SMT. So to me, and I was bullish on the week off the bat. This was the 4 hour zone that I wanted to see hold. If that zone failed, then I would have changed my bias, but it held. So I was still bullish for the week. If we go down to the 1 hour time frame, we can see the trade that I took right here. Pretty textbook. 1 hour fair value gap. The pullback is slow, as you can see. The displacement happened here, and this 1 hour candle closed like this, respecting the fair value gap. I still hadn't gotten price basically didn't go where I wanted price to go, so I was still waiting, and there was all of this sell side liquidity to target, as well as these highs, which we will see on the 15-minute time frame. So on the 15-minute time frame, this is what I was looking at. Basically, we hit this 5-minute order block down here, just here, and yeah, it was a pretty textbook setup. Like, we'd been pushing down basically since New York and all the way into Asia, and then we got price commit to the upside, breaking this high. There was no real supply that I was worried about to cause a larger pullback. This is the 1 hour fair value gap, and this was a 15-minute order block. And so I simply executed with a 1 minute market structure shift here. Literally very basic, just like there was liquidity here before the M15 zone, and then we broke this high right here, and we displaced on the 1 minute, and so I just took it off of the order block essentially. I entered, yeah, I just manually entered right here. I didn't set a limit order. And then I made 3.1% on this, but this was basically my target. And what had happened on Monday is I took this trade, I was up like, I even took a continuation trade right here. And so total, I was up 3.5%. And then it literally reversed on me. And so I got stopped out of break even to make nothing. And I think that coming into this trade, I should have maybe, I should have just managed it differently. I should have taken 50% off at whatever, like this high, and then just set my stop at break even, and then just wait to target that high, which ultimately got hit. And this high, I believe, is also it's the 4 hour fair value gap, which we have now inverted, by the way. And so that's basically the trade setup that I took. My strategy is pretty discretionary in the sense that I look at the higher time frames always. So I don't know how there are some traders that don't look at the higher time frames. I'm always starting on the monthly and the weekly to get my idea of direction. Like, this is the monthly order block that we tapped into. We created a doji, and now I'm expecting some bullish movements up into this gap before continuing lower and maybe targeting this low. But on the weekly time frame, we got this market structure shift right here. It's a minor one. I can see how some people would have just drawn their OTE on here and been like, oh yeah, it's ready for shorts. Oh, anyways, you get what I mean. And on the daily, yeah, we basically had the weekly gap still open. We had this daily gap still open. Now we've printed a nice bullish candle. I can now move this daily gap down here. This weekly gap is no longer relevant. And now I'm looking to continue longing this coming into these highs. We do have CPI today. If I look at my Forex Factory, we've got CPI. So I'm probably not going to be taking any trades as of today. And then at 10 a.m. we have Powell testifying. So there might be something in London, but I'm expecting consolidation and then CPI to just sweep a major low and then boom, all of this sell side liquidity to target. Look at these daily equal highs right here. They're so clean. And yeah, I'm just going to go over the 15-minute time frame one more time to make you guys understand why I took this trade. So this is literally a textbook market structure shift. Like this, like this, like this, like this, and this is where I entered. And this happened to be stacked PD arrays. So there was a 15-minute order block right here, 15-minute order block. There was a 1 hour fair value gap. There was liquidity before my 15-minute order block. And then I got 1 minute displacement. So everything was aligning. And on top of that, we had higher time frame SMT and lots of liquidity to target. Okay? So it was just a very clear trade. I closed early, yes, but it's a win. I made 3%, and that's great. If I made 3% every day, I'd be very successful right now. So yeah, that's the trade review for today. Later today, I'll probably post my my analysis, my pre-London analysis, to see what specific M15 zones I'm looking at, and then we'll just go from there. And tomorrow I'm expecting Thursday to probably be a better trading day, just because. Oh, never mind. I mean, maybe London can offer something, but we do have lots of news today. I mean, this week, and I've made my 3%, so I could be done for the week. Even if I'm done, I'll still be posting my videos. So yeah, guys, I hope this video helped you. I hope you could analyze. I definitely recommend that you journal the trades that I show if you're trading ICT and these concepts are familiar to you and you use pretty similar things. Use me as a way to journal your trades. That's it. Thank you.